Well, let's get back to some corporate conversations now. And it was a good set of earnings coming in from data patterns in the first quarter. The company's revenue and profit was aided by other income. However, margins were flat year on year due to higher raw material costs. Srinivasa Gopalarajan, Chairman and Managing Director at Data Patterns, is with us now. Thank you, sir, for joining in. So, I just want to go back to your stated intent of growing the top line at 40%. At 40% margin. So if I look at the Q1 performance, then, it's probably not bad. You've grown about 31% at the top line. Even the EBITDA margin is at 30%. So you're at 30-30, whereas the promise was 40-40 over the next 2-3 years. How do you see yourself progressing towards that guidance?
Our business is not a quarterly business. It's more year-end business. And the last couple of years, we're trying to average out the business, see that quarter-to-quarter sales is also taking place. So you can't really compare a quarter sales and bottom line business on a yearly numbers. So that won't work out. So I mentioned last time with you that this year we'll do more than 20% top line and more than, increase of 30% bottom line is what we're thinking. But this will happen over the next 3 sessions of next 3 quarters.
Could you repeat the top line number? 20% this year?
20%. Because we have orders at hand for more than 1,000 crores now. But it depends on what we can deliver this year and what goes to next year. So this is going to go, in the course of the year, we will be able to give you a correct guidance.
So 20-25% is growth at the top line level or the bottom line level, you're saying?
Top line. Bottom line should grow far better.
All right.
Okay. Not that.
Well, good morning, sir. So that would mean margins will improve as well from here for FY24. What kind of a margin guidance could you give us?
We retain this 39-40% EBITDA. I think we should do that. And so margins is expected to go up this year than last year.
All right. Because at the first quarter itself, it's a little lower than that mark. It's in the early 30s. You're saying that it'll be mid 35 to 40%, right?
It will go nearer 40%. Because what happens is quarter to quarter, our expenses are 1/4. But the sales is much lower than a yearly sales. It's not divided by 4 sales. So we are a more year-end company.
Okay. So you said your current order book is more than 1,000 crores, right? What's the exact number?
We bought 1,030 crores, 1,060 crores is the orders at hand. This is actual orders at hand plus orders finalized, negotiated, which is expected in the next couple of weeks. So it's about 1,050 crores.
Got that. And what about the order inflows? I remember last year your order inflows were very strong. I think it catapulted to 900 crore, a 3x jump. What's the kind of order inflows that we're looking at based on the bidding pipeline?
I'm not able to say, but it should be above 500-600 crores as we go along. And these are more towards our single vendor contracts and contracts which is already executed earlier. We expect some repeat contracts to happen. We're also bidding for some contracts. Those are tender-based business, so we are not very sure which one will fructify. But expected contracts also should be above 500-600 crores we should be able to get this year based on previous delivered orders.
Mr. Rangarajan, can you tell us, what segment do you expect the bulk of this growth to come in from? And there's radars and, electronic warfare, test equipment, etc. So this year, what do you think will really fire up for you? And apparently, you were also looking at fresh product development, new product development. So, what's happening on that front?
Our main business will come from radars in electronic warfare and in avionics as you go this year. We have raised, one difference what's happening in the Indian market is India is now looking inwards to build products. We were always importing defense products all along. Now the policy framework is very clear that we look inwards in Indian systems to build these opportunities for products. This gives us enormous opportunity for companies like us who actually build products in-house. We do end-to-end product development in-house. Over the last 20 years, we've put in a lot of investment in product development. So this is the reason why we went for a QAP, took about 500 crores. Now we're going to invest this money in build world-class products in satellites, in radars, in electronic warfare, in communications. And once we kickstart the product, we expect the next 3 to 5 years, we should rapidly scale the revenue and the bottom line going ahead. Because we are a product company. And if you have products which can meet India's requirements as against importing or integrating or manufacturing international products, we want to do it on our own. So this is an excellent opportunity for us to really scale the business. We are looking at multiple times scaling the business in the coming 2, 3 years, 4 years down the line.
Okay, just a side question, since this came up in the news a day or two ago, I thought I'll just check. The government apparently came out with guidelines banning the use of any kind of Chinese equipment in drones, which is not your area of business. But since you are operating in defense, are there any China connects in your vendor supply base at all? Anything that we should know?
No,
just from a regulatory standpoint.
Yeah, in defense, we are also not encouraged to buy components from China. So we give an undertaking that there are no components from China. We buy mostly from Europe and US, and not.
Sure. So that's not a sort of a concern, even if policy changes for your line of business, and that's not a concern because you're not anyway buying from China. Got that. Thank you, sir, for joining in. Good chatting. Short call today. We'll hopefully do a longer one as we go along through the quarter. That is data patterns. Stock has done very, very well, up almost 80% this year.